Good morning, everyone. This week's going to be a very crucial week for the stock market. On Thursday, we have second quarter GDP data, and on Friday, we have PCE, personal consumption expenditures, inflation numbers. This is huge for the market. But before that, I wanted to talk a little bit about Tesla and Google and some cryptocurrency news. First, Tesla reported their second quarter earnings. And although they pretty much dropped 7% on automotive revenue, although their overall revenue was up 2% based on their strong energy deployments in Powerwall and solar. That was pretty high, which helped Tesla have 2% higher revenues. But their automotive revenues were down, and their earnings per share was less than expected. And their margins were, there was a drop in their margins. So Tesla's EV demand has been cooling the past few quarters. But we're starting to see, in my opinion, a turnaround in China. And I think perhaps we bottomed in that because Elon Musk said in the call that the big prize right now is AI, investments in AI, robotaxi, and solar. And we already saw some of the investments in solar pay off with the mega wall and solar deployments that were issued in Q2. And remember, Tesla's not just a car company; it's a technology conglomerate that focuses on solar energy, robotics, and AI, and humanoid robots. So those investments might take a couple years to pay off. Elon Musk said he's holding off on his Mexico plant until after the November election. And I just think we have to wait it out a little bit for another couple quarters, because ultimately I think the Tesla growth story will happen, especially because Elon's investing aggressively for a lower cost robotaxi type car, a lot of AI investments in humanoid robots. So Tesla is focusing on the longer term vision, not just cars right now, not just EVs right now. So I think, but either way, I think EV demand is at its bottom. I think it'll turn around again soon. And then I wanted to talk a little bit about Google. Google shares declined as well. I forgot to mention though with Tesla shares are down about 8% on that earnings report. And Google shares are down as well because although Google met their earnings expectations, mostly due to cloud, they missed on advertising ad revenue and because of their AI investments. But if you listen to the calls of both Google and Tesla, those conference calls were pretty compelling in terms of the investment in AI. That's just my opinion. I also wanted to talk a little bit about Ethereum. SEC approved Ethereum ETFs began trading yesterday with over $1 billion in volume. This is huge. And I wanted to also mention that Bitcoin ETFs actually have received more inflows than NASDAQ QQQ ETFs year to date. So the fact that Ethereum ETFs received $1 billion of inflows on the first day is pretty encouraging. It opens the floodgates a little bit more to institutional investors. And it shows that Ethereum, that the SEC deems that Ethereum is not a security and rather a commodity. And Ethereum, I view as more like an Apple play on crypto. You could think of Bitcoin as digital gold. Ethereum is like Apple. It's a decentralized app store with applications kind of, for instance, you have decentralized finance, NFTs, smart contracts, and a lot of developers use Ethereum for those kind of decentralized crypto applications. So it's different than Bitcoin. Bitcoin, as I said, is more like digital gold with a finite supply of 21 million, and Ethereum is more like a decentralized app store, as I just mentioned. And we have some interesting news, and I would say good news. We have potentially that Kamala Harris will be speaking at the Bitcoin convention in a few days, joining Donald Trump and perhaps I think RFK Jr. for all three major presidential candidates speaking at the Bitcoin conference. This shows that Bitcoin is a bipartisan policy right now, and this is good for Bitcoin and crypto, in my opinion. Rumors were that Trump would say he would make Bitcoin a part of the strategic reserve, which led to Bitcoin's partial jump of 10% over the weekend. And lastly, I want to touch on three quick news stories. First, we have former Fed official Bill Dudley thinking that the Federal Reserve should cut interest rates in July, not September. And he was wrong for thinking in September because he's starting to see the economy weaken and he wants to prevent a recession. I kind of agree with him. I think that the Fed should be a little bit proactive and not reactive because higher for longer interest rates really do put a drag on the economy and their effects lag. So it's important not to look at data from the rearview mirror. It's important to look at leading economic indicators in terms of the reality on the ground today. And then we also had Ed Yardeni from Yardeni Research, who's a notable market bull, saying that he thinks that the market rally could continue pretty strongly because of earnings growth and underlying economic momentum. And I kind of agree with him. I definitely see that there's a lot of momentum, especially with investment in tech and AI. And economist Mohamed Alarian also believes that for the first time in 2 decades, he expects the economy to grow pretty strongly. And I certainly agree with him, especially for the reasons that Ed Yardeni described in terms of AI and tech spend and earnings growth and some fundamentals of the economy doing well. And I think the rate of inflation going down, especially if the Fed performs this balancing act and starts cutting interest rates soon. I definitely kind of agree with him. Oh, and one last thing I promise is that FundStrat's Tom Lee, he pretty much reiterated that he thinks that small cap stocks could rally 40% by the end of the summer, and I ultimately agree with him. I think that investors will bet on small caps ahead of the first interest rate cut by the Fed. I think that they'll front run it, but when the reality of the cut happens, that's when I think consolidation for small caps or a possible 5 to 10% pullback will happen. It'll be, in my opinion, a buy the rumor, sell the news event. So let's stay tuned on that. But I think the summer of small caps is upon us.